Hi, everyone, and welcome to UBS Trending. I'm Anthony Pastore. The 2021 tax season is now winding down to its final few days, and yes, taxes are due by Monday, April 18th, so just a quick reminder there. After paying for the damages to the IRS, though, investors often renew their focus on tax-exempt munis. Looking at yields on tax-exempt muni bonds, they have surged, and rate volatility does remain high. So we have a lot to talk about today with my guest, Kathleen McNamara from the UBS Chief Investment Office. Kathleen, thanks for joining me for our monthly focus on munis. Good to see you.
Good to see you, Anthony.
Great. Kathleen, so obviously we talked about how taxes are due on Monday of next week. So as we said, taxes are, of course, top of mind, and especially as people who are paying taxes are now turning their attention to those tax-exempt munis. So what can you tell us about recent muni performance?
Sure, Anthony. I mean, as you already know, it was not a good first quarter for the fixed income markets as a whole, and tax-exempt municipal bonds were unable to escape the fallout. In fact, it was surprising to note that munis had their worst quarterly performance seen in a few decades. The downturn that we witnessed in the first quarter of over 6% even surpassed the losses seen in the first 3 months of 1994, albeit by a small margin. As a point of reference, in the early part of 1994, the Fed caught markets off guard by hiking short-term rates at a rapid pace over a short time horizon. That sent prices of fixed income securities sharply lower, including munis, and a high-profile municipal default by Orange County, California, took place later that year. Thus, in the history books, 1994 epitomized a bad year for munis. We attribute this most recent poor quarterly performance, as you can see in my chart there, again to an abrupt move by the Fed. On the bright side, a large muni default in the months ahead is not likely.
It's scary to think about how long it's been since we've seen those kinds of moves, Kathleen. 1994 seems like a million years ago, and probably
Yes.
A lot of folks watching won't even remember 1994 as they might have been very young. So very interesting piece of history.
I had to dig up a lot of data.
I bet you did. I'm surprised it even goes back that far for some of the things you're looking for. So let me ask you the next question. So what can you tell us about the yield movement along the muni curve specifically?
Sure, Anthony, I'm happy to. I mean, in the space of only 3 months, high-grade AA rated munis have reset higher by 130 basis points to 175 basis points across the yield curve. The largest increases were seen in the early maturities, reflecting the Fed's pivot to a tighter monetary policy, as you could see in the chart. As a point of reference, yields on AA munis at the 3-year maturity point reset higher by 175 basis points, lifting those levels to hit over 2.1%. That's up from only 40 basis points at the end of December. At the same time, AA muni yields at the longer end of the curve surged by about 130 basis points to crest the 3% level. These increases are noteworthy for investors that have been waiting on the sidelines for months and in some instances even years for rates to move higher and municipal bond investments to look more interesting to them.
Yeah, it's interesting when you look at these charts. There's so much consistency, and then obviously in the last couple of years, there's been a lot of activity. And as you said, that reset of tax-exempt muni yields to these much higher rates is certainly noteworthy. You don't really see this kind of action normally in munis. So what do muni yields now look like, would you say, on a taxable equivalent basis?
That's a great question, Anthony. I mean, taxes can take a big chunk out of investment income, and now I think that's fresh on our minds as many of us, including myself, rush to file our taxes this week. Therefore, when considering positioning assets in tax-exempt municipal bonds, it is important to note the taxable equivalent yields, often referred to as TEYs for short. As I show in my chart there, TEYs on AA munis for investors in the highest marginal tax bracket now sit at roughly 3% to 5% along the yield curve. Meantime, the yields on U.S. Treasury securities stand at only about 2.5% all across the curve. So this suggests that munis represent a good value on a tax-adjusted basis. And if state and local taxes are considered, munis can be even more favorable for individuals that reside in states that impose high personal income taxes. New York, which is our home state, California, and New Jersey make that list.
Yeah, unfortunately.
Yes.
Right, exactly. I did my taxes. Probably not the best year for me. Paying the Fed. Even being a homeowner, it's a little tough these days for certain people who live in those high tax states. But certainly, when you talk about and Matt, can we flip back to that chart for 1 second? Because Kathleen, when you look at that chart, you can really see, as you talked about, that tax equivalent yield versus 10-year Treasuries. It's fascinating, especially for people in these high tax states, to really understand what this chart is looking at. So thank you for sharing that with us. So I wanted to talk about portfolio themes with you. Thank you, Matt. In this early part of the second quarter of 2022, what would you say are the top muni themes that you are now talking to clients about, and certainly our advisors here at UBS are talking to their clients about?
Sure, Anthony. I mean, in addition to taking note of higher taxable equivalent yields, which we just talked about, a second tax-related theme that we're now focused on is to review muni portfolios for tax loss harvesting opportunities. Rather than waiting until year end to harvest capital losses to save on taxes, it can be advantageous to check throughout the year for those opportunities. And finally, in the face of an uncertain rate environment, adopting a barbell strategy for muni portfolios is a theme. Positioning assets in short-dated bonds for liquidity and reinvestment opportunities, along with an allocation to longer maturities with high coupons of 5% and higher for incremental tax-exempt income, is prudent in our view.
Terrific, Kathleen. And one last question before I let you go. I want to ask you about credit quality in munis, and specifically, what is your outlook for defaults right now?
Sure, Anthony. I mean, credit fundamentals in the muni space remain stable, supported by the economy and better than expected tax revenues. And muni default rates have stayed very low. In fact, payment defaults totaled only about 0.02% in the first quarter, and that's based on data compiled by our industry colleagues over at Municipal Market Analytics. Not surprisingly, most defaults were concentrated in the nursing home, senior living sectors rather than on traditional munis. And that pattern is apt to continue in the foreseeable future.
Terrific. Well, Kathleen, thanks for dropping by. Always good to get your take on what's going on in munis, especially as we said right at the top, we are preparing to file those taxes. I hope you get yours in before the deadline, yes. Kathleen. Thanks very much. Good to see you.
Thank you so much.
Take care, Kathleen. Again, that's been Kathleen McNamara, Senior Muni Bond Strategist here at UBS and our Chief Investment Office. And for more information on this conversation, plus lots more coming out of the CIO, visit our website at ubs.com/views. And make sure to follow UBS on social media. We're on platforms like LinkedIn, Facebook, Instagram, and Twitter. Plus, you can check out all of our past UBS Trending episodes on demand on our website, ubs.com/studios, and on the UBS YouTube channel. And as always, if you have any questions about your own portfolio, please make sure to speak with your financial advisor. Until next time, I'm Anthony Pastore. We hope you have a great day, everyone. And remember to keep your eyes on what's trending. We'll see you soon.